I generally think so. I think we've generally seen improving liquidity. A lot of it's fiscal driven, and so I do think that they've resisted the fact that yields are higher, right?
In this video, Lyn Alden talks about how important she thinks it is for people to use cryptocurrencies on Bitcoin and Ethereum exchange-traded funds, ETFs, and talks about why she is so positive about Bitcoin. Without further ado, let's watch the video.
So I think that because we're now in this kind of fiscal dominance regime, higher interest rates fuel the deficit even more, which potentially fuels gold. I think you could get liquidity, like temporary liquidity shocks, if, for example, you run these big deficits, the Fed tries not to monetize them, and you get kind of like a temporary liquidity problem in treasury markets. That could certainly contribute to a gold sell-off temporarily. But I do think the breakout has legs to it. I think that the breakout is real. I think that it's based on fundamentals. I think that there's a good reason that a lot of foreign investors want to own gold more so than treasuries. Um, and that they want to basically have a better ratio of gold to treasuries. And I think that that's probably going to be a longer term story. And I have no view on what gold does in, say, a 3 month period. But I do think it's now that it's broken out, I think that's a very strong sign that I think it's probably headed higher in the next few years. Well, so what Bitcoin mining does is it soaks up stranded energy. So when the supply of the grid is fluctuating, right? It's some if it's solar and wind, it's obviously fluctuating based on those conditions. If it's hydro, it's fluctuating based on rain. If it's nuclear, it's always on. So either way, you have this kind of always on or fluctuating supply of electricity. And then on the demand side, you also have fluctuating demand. So during the day, there's different cycles, and then during the seasons, there are different levels of temperature and things like that. And the problem is that grids have to be designed for like the hottest day of the year. Like when everybody has their air conditions on, when everybody's using peak electricity, they have to design for that day to hopefully not have brownouts, which means they have to overbuild for every other day. And so you have these kind of two sine waves of supply and demand for electricity, and they're always dealing with like a potential mismatch. And so sometimes they're shutting off energy sources, sometimes sometimes they're having brownouts. It depends on the grid we're talking about. And one thing that Bitcoin mining is it's a very flexible demand source. So, when energy pricing is cheap, they can be operating at full speed. But then as soon as energy pricing gets expensive, either because some supply went offline or because there's been a surge in demand, they can throttle back their demand because they're in the most flexible position to do that. Obviously, if you're a hospital, you can't change electricity based on pricing. And even if you're doing something like you're a manufacturer or you're running an office, you can't. It's much more disruptive to change your electricity consumption based on grid pricing or grid shortages compared to if you're a Bitcoin miner and you structure your contract to say, look, we're going to get the lowest cost, but we're going to be the first in line to turn off whenever there's a issue. And that's how they structure that, or they sell it back to the grid. There's also things like, the World Bank estimates, if you look at their estimates for how much natural gas is just flared into the atmosphere every year, it's something like an amount of energy that can power the Bitcoin network 8 times over, or how much methane leaks out from landfills into the atmosphere, right? So basically, there's a unfathomable amount of just stranded energy out there, and over time, Bitcoin kind of fills in those gaps. It takes a couple cycles to do so, but we've already been seeing it do that. And I think that trend's going to continue. I think it just becomes an embedded part of the grid. And then anytime you have any sort of variable power or fluctuating demand relative to steady power, you're leaving money on the table if you're not using some of that to mine Bitcoin. Because if you're getting zero or negative cost, negative revenue for your energy, then you're leaving money on the table. I generally think so. I think we've generally seen improving liquidity. A lot of it's fiscal driven, and so I do think that they've resisted the fact that yields are higher, right? Right. So normally when you see yields, and especially real yields this high, you should see gold a lot lower than it is. And so I think that gold investors have been sniffing out some of those fiscal problems that I've been talking about. And in addition, because of kind of decisions by central banks to diversify their reserve holdings and have more gold in their portfolios, that's been another huge factor as well. So especially from that foreign component, there's been a lot of demand. And so, Bitcoin's obviously had somewhat similar catalysts. It's heavily tied to liquidity. It's had catalysts from the ETFs and things like that as well. So the reasons that both of them are rising, I don't think are perfectly overlapping, but I do think that they are following liquidity, and which is largely a fiscal driven phenomenon. Yes, but that's generally what you see in emerging markets when they have fiscal problems or currency problems. It's just not to the same magnitude you see in those environments. Yeah, I think what we're seeing is the denominator is going down more so than some of those assets are going up outside of the big bubble ones. And I would be concerned about some of the major stock indices because of how concentrated they are into some of the most expensive growth names. And so I expect the fundamentals of a lot of those growth names to probably do pretty well. It's just the question of how much you pay for them and how much of US household net worth is already stuffed into equities. So I do have concerns about them all continuing to rise together. But I think that overall, the reason that those assets continue to surprise to the upside is because of that fiscal backdrop. If you were trying to short assets in an emerging market in a local currency, you're going to continually get headwinds from the fact that that currency is so weak, right? It's just that currency is going up in supply so quickly that the assets that you're denominating them in might not be doing great in real terms, but they're certainly doing fine in that local currency terms. And, we're not anywhere near that level, but it's directionally a similar problem when you have this kind of unrestrained fiscal spiral that's kind of just a slow motion background situation that just changes how some of these assets are priced. And it doesn't mean you can buy things at any price, but it means that when in doubt, the answer is that scarce assets will go up in price relative to currency units. I think those are both factors. I think the ETF unlocks, there's pools of capital that are very big that have not been able to access Bitcoin. And so those pools of capital can increasingly access Bitcoin. And so that's kind of pent up demand for exposure to the network that they now have exposure to, or at least, and they don't even all have it yet. Sometimes it takes months for those things to still get approval to start moving in and start to become normalized in those environments. So I think that is a contributor to price. The halving, certainly in a sentiment sense, can raise expectations. I think that overall liquidity is a much bigger impact on Bitcoin price during bull markets than the halving itself. Because if you do the math for how much supply the halving takes off the market per day, it's relatively small compared to what you can get from ETF inflows, or relatively small compared to what you can get in one-way kind of net exchange volume in a given day. And so the overall changes in external demand for Bitcoin play a bigger role than just the halvings during bull markets. I think where the halvings really matter the most is during bear markets. They play a pivotal role in why each cycle gets higher highs and higher lows than the one before it. But in terms of the timing of bull markets specifically, I generally point more toward liquidity and less so toward the halving, even though the halving is a very relevant kind of longer term factor.
And so, putting everything together, do you anticipate Bitcoin to continue to outperform the other assets this year?
So for this year, I'm less certain. I prefer a 2-year view on Bitcoin. So I think that Bitcoin's likely going to do well over the next, call it 2 years. Um, it can get through periods where it's overbought, right? Where you could have a pretty poor 3-month period with Bitcoin and it could underperform almost everything. And then it could have another 3 to 6 months of spectacular gains. And so my view is generally looking back from late 2025, I'd be surprised if Bitcoin was not higher than it is now, notably, and that probably outperformed other kind of large cap things you can own. But you have to account for the volatility, and you have to kind of be prepared for that really uneven path to get
The
there.
person behind Rich Dad Poor Dad has promised to buy as many coins as he can. Making reference to the leading decentralized, he also reiterated Dent's prediction that the baby boomer generation will bear the brunt of losses when the value of their homes plummets, with those who are well prepared standing to gain the most. Finance defies asset as the people's money. Might become billionaires in the near future. Even if they don't already own gold, will Bitcoin and silver become profitable? Though they caution that doing one's own research is essential prior to investing, several well-known cryptocurrency trading experts are optimistic about the future of these precious metals, predicting that the price of Bitcoin will soar from $100,000 this year to an astounding $1 million in 2025 based on multiple market indicators. If you enjoy the film, please like it in return every day. We believe that knowledge is power and are committed to helping you achieve financial independence until the next occasion. We wish you the best of luck with your shopping.